Drop it.
Hello, and welcome to the Be Real Podcast, the Maryland real estate podcast. I'm Michael Becker of Sierra Pacific Mortgage, and as always, I'm joined by
Brad Cox with the Vesta Group of Long and Foster. Hey, Michael, how are you?
I'm wonderful. It's been a great week weather-wise.
Oh, it
Got
was
spring
glorious.
going. Walking the dog today. This morning, I could see the dandelions. Not dandelions. I said it earlier.
Right. I remember you saying it earlier, and I can't remember what you said either.
Well, there's crocuses and what are the early...
Daffodils.
Thank you. Gosh. They both began with D. Daffodils.
Yes.
Are breaking through the grass. And it is Super Bowl week, so...
It's Super Bowl Sunday tomorrow. So we're recording this on a Saturday, the day before the Super Bowl.
Right.
So by the time this episode's dropped on Wednesday, the Super Bowl will already have happened.
It'll have happened for a while. People may have even forgotten about it.
But they may have. But what's your take, Michael? What are you thinking?
Right.
What's going to happen?
If you really... I don't care.
I don't care either.
My team's not in it. I only hope that my numbers for my Super Bowl hit, which haven't been drawn yet. They better be drawn soon. I also hope the over hits.
Yeah.
Because I always like betting the over because then that's the one bet you can win before the game's over.
Yes.
But they're evenly matched. It should be a good game.
I think it's going to be a great game.
And as I was saying to you a little earlier, I think the difference maker might just be the injury to Patrick Mahomes. I don't know how badly he's hurt. Philadelphia's got a good defense. They may make it a little tougher on him, although he's an incredible quarterback. But because of that, I'll pick.
He is. He's unpredictable. Makes things happen. But your pick is?
Philadelphia beating the Chiefs. I'm going to throw a score in, too.
Give me a score.
37-34.
37-34. All right. Good deal.
How about you?
Well, I'm thinking a lot the same as you did. I believe his injury is going to be a factor.
Takes a while. High ankle sprain doesn't heal in 3 weeks.
Right. I mean, he's younger. When you get to our age, it'd probably take 3 years.
I mean, having those 2 weeks off between the AFC Championship game to the Super Bowl helps, but it's not going to be perfect.
But you could see in his last game that he played, he was. Yeah. But he still made things happen.
Right.
But I think quarterbacks, Mahomes has more experience than Jalen Hurts, but Jalen Hurts is a powerhouse, right? The guy is a power lifter, and he can push the ball. So
move the ball if he needs to. If everything else is gone, he can run. He's an incredible runner. He seems he missed a few games late in the season, but he does seem. I would say he's probably healthier than Patrick Mahomes.
Yeah. So I think you're right, and I think your score. I think I'm gonna.
It's a high score. That's 71 points, and the over is like 51.
Yeah.
It would be fun if it's that high because that's an exciting game, right? Back and forth all game, right?
Right. I think I'm gonna give. I'm not gonna give you an exact score.
Come on, just do it.
But I think I'm gonna make the spread a little wide. I think I'm gonna say by 10 points.
Oh wow.
Eagles by 10 points.
All right, fair enough.
All right.
Will he at least hit the over? You don't have to say. It's okay.
We'll see.
All right. Enough talk about the Super Bowl. We're here to talk about real estate and mortgages, and as typical at the beginning of the show is the rundown.
Yes.
And I'm going to talk a little bit about mortgage market activity and interest rates. And to be consistent from one week to the next, I'm going to continue using the Mortgage Bankers Association's report that comes out every Wednesday morning.
Right.
With the caveat that some things happened at the end of the week that changed where these rates are. So
pretty significantly.
Exactly right.
Yeah.
So good news for the week. The applications increased 7.4% on a seasonally adjusted basis from 1 week earlier. On an unadjusted basis, they increased 8% compared to the previous week. Interestingly enough, refinance index was up 18% from the previous week. That's a pretty big jump. I mean, however, we are still 75.
That rally, maybe.
Well, lower rates may push that, but I wonder. I mean, a lot of people rely. We're going to talk about that a little bit on the Unreal at the end of the show, what I think might be happening there. But for a refinance index to increase 18%, is pretty remarkable given rates are still in the sixes. But remember, they're still 75% lower than they were this time last year. So they're still depressed.
Coming up from the trough. Easy to show.
Deal. For the fifth, according to the Mortgage Bankers Association, applications rose last week as the 30-year fixed mortgage inched lower to 6.18%. Remember, last week it was 6.19. The week before it was 6.2. I've been mentioning how steady rates had been, and there was something that was going to have to push us out of that where we were, and something did happen. We'll talk about that in a second, though. Actually, well, let's talk about it now. They were really steady for a long time. I predicted they would be flat after last week. We mentioned there was a jobs report that came out and it moved markets at the end of the week, a Friday, right? Because we recorded this on a Saturday. And I predicted correctly in my weekly thing that rates would go up because of that report, but I thought the damage had been done. Well, we saw a little follow through on Monday, but then things settled down on Tuesday and Wednesday. Specifically Wednesday, we saw a little bit of a rally in bonds, and it was because a 10-year Treasury auction had done well. Well, the next day, there was a 30-year Treasury auction, and that was one of the worst 30-year Treasuries. It was poorly subscribed, and it pushed yields up.
Yeah.
We had a lot of Fed officials were speaking and reiterating the Fed's fight against inflation and the concern that the labor market is not slowing down. And markets who had been predicting the Fed pausing and then pivoting to rate cuts late in the year suddenly did a turnaround and thought, well, we might have to go higher. Bueller, I can't think of his first name, he's a Fed chairman, a Fed president, gave a speech and said,
Peter Weller.
Peter.
Yeah, no, I'm kidding. It's RoboCop.
Well, there's another guy who also said it. I always remember his name. His last name is Cash Carey, which I always thought is a great name.
That's a great
name. Cash Carey is a name for a Fed president. But anyway, he mentioned that the Fed may have to keep rates elevated for years. He didn't say a year, years,
right.
is
Plural.
what they said.
Right.
I think what they're doing here is trying to let the markets know they're serious about fighting inflation, although inflation's coming down. Goods inflation has come down. They're concerned about service inflation. And with the strong jobs report out there, that may keep service inflation higher than it would be otherwise. If jobs layoffs increased or the job market softened a little bit, or if less jobs were created, or if even we had a month where we went negative on job growth, like there were jobs lost, that would make the Fed feel a lot, not that they want people to lose their jobs, but they like to see a softening of the labor market, so there's not that upward pressure on mortgage rates. So we ended the week pretty bad sell-off on Thursday and Friday, and I'm reporting week to week. I always use the Mortgage Bankers Association but we always like looking at Mortgage News Daily. They have a pretty good interest rate.
Sure.
And last week we told everybody out there that for one day that average rate had dipped below 6. It was 5.99.
5.99.
And then it went to 6.19 a day or two later. Well, we ended the week at 6.5%. So, folks, that's how fast rates can rise. It takes months to drop, and in a few days you can see a spike in interest rates. I'd say that's probably pretty accurate. Government rates are a little bit lower than that. 6.5 is that's for people who are well qualified and can get the best rates out there. Obviously, people with lower credit scores or higher debt-to-income rate, higher loan-to-values may have to take a higher interest rate than that. But just know that interest rates went up. We'll see what happens from there. From here, I'm once again going to say, since the damage has been done, this is my prediction from yesterday, Friday, to next Friday.
Okay.
Even though we have a very big and important economic report coming out Tuesday, which is CPI, or Consumer Price Index, I'm going to say rates will be flat for the week. They're predicting more improvement in the overall inflation rate. They think core inflation will go up a little bit, but not much. But the headline numbers should drop from 6.5 year over year to 6.2. Now, if we were to get fortunate and there was a drop in inflation greater than expected, and let's say the year over year were to drop to a 5 handle, 5.9, at that point we might see a little rally in bonds and we could see improved.
Which would be great.
But I think what it comes down to, Brad, when we're talking about interest rates with clients, I would hesitantly, after the damage is done, if I had somebody who's getting a contract today, I'd wait and see what happened Monday. I'd be very cautiously floating and see what happened, but be ready to lock that rate in should something happen.
Right.
Anytime you've had a few days of worsening rates, there's a slight chance for a short rally. That happened to me this week. Monday we had a bad day for rates, and I got a contract finally ratified on Tuesday, and I called the client up and told him that I would probably lock it in. I don't see much benefit in floating, given the way the markets have turned based on the employment report. But late in the day, I saw bonds rallying, and we never got a reprice for the better. I contacted them and said, hey, I think let's wait till tomorrow morning and see what happens. And if it's better, we'll lock in. And it was better. It wasn't a huge improvement, but the bottom line is the same rate cost $1,000 less in the morning than it did afternoon.
$1,000 is $1,000.
$1,000 is $1,000. I mean, it's not much when you're talking about a $400,000 loan, but every little bit helps.
Absolutely.
Right? And that's what I do in my job. I mean, I can make educated guesses. I have no crystal ball, but I do my best. And so
more
far,
often than not, you are spot on.
I'm pretty good. Yeah, that lock-in saved them some money, and not only that, by locking in instead of trying to get greedy and get more out of the market because it was improving, I saved them because they really tanked.
Yeah, they really did.
But given the big spike, a 0.5% jump in interest rates is quite a lot. So I'll say flat for the week, and I hope I'm wrong to the downside.
Well, that would be ideal. All right. Well, let's roll into what's going on in the real estate market. And I
need to silence your phone.
I did, but it's someone who overrides my phone when I have it on silent.
You should take a picture of this recording in process and put it on your phone.
Put it on my phone, right? Yeah, maybe that would make a difference.
Anyway, sorry. Go ahead.
It's all good. So normally I talk strictly about the last 7 days, as you do, because we try to keep up to the minute. But I think once a month, a good month-long view and a trend report would be helpful to people so they can see where things are going. So what I'm going to do, we've got the numbers now for all of January, so I'm going to talk about what happened overall in January in the Baltimore metro area. Okay, so closed sales. January 2023, we had 1,701 closed sales. Now our 5-year average is 2,330.
So a little below.
It's a little below. New pendings went from at a 5-year average of 3145 to 2417. So that's a little more precipitous drop. Active listings, normally our 5-year average 4824 down to 3582.
Okay.
And remember last week we were talking about months of supply. That really hasn't budged much at all, right? We're at about we're 1.1. And it's funny, the 5-year average now, because we've been down so long, our 5-year average, which normally hovered around 3.5 to 4 months of supply, is down to 1.4 months of supply.
5-year average.
5-year average, because we were so low. We were down to 2 weeks. 2 weeks in months of supply. We didn't even have a month. We were down to 2 weeks of supply.
Imagine that. If you would have guessed or predicted that rates were going to go from 3 to 7%, then to 6, you would have thought months of supply would have expanded greatly.
So dramatically, but it hasn't. Yeah.
Interesting.
Yeah.
So because there's demand, I think people get what we talk about on the show and the benefits of home ownership and wealth building assets.
Absolutely.
Aspects.
Yep. All right, so I want to go over a couple of other things. We talked about the sold listings, right? 1,701 from 2020 in 2023. Just to give you an idea of what happened last year in comparison, year over year, in comparison to the 5-year average. 2022 was 2,600, so it's a decrease of about 34.5%. All the pendings. 2022 was 4,483 in January. In 2023, down to 3,204. So 28.5% drop there. Okay. Days on the market, another metric that we really track closely because that shows how active the market is. They're up. 2022, we were at 12 days. That was the key to the market, 3%. Things were going crazy before things changed in 2022, right?
Yeah. Well, I think it started right off. It was funny. The end of 2021 was rates ended well, but right off the get-go, as soon as we got out of the market, first day on the market in 2022, January, we started seeing bond sell-offs, and rates were still good, but it was immediate, and it was the entirety of the month. There was no pause; it was just constantly getting higher. And I think when it's fence sitters out there, all they need is
needed to get off the.
A spike in rate will make them jump off that fence real quick.
Yep.
Right?
So we were 12 days in 2022, 22 days
Makes sense.
in 2023. So it's an 83% increase. The average sold to original list price ratio, right? Where were people listing and how much did they actually net of that? Still pretty high, 97.5% in 2023. Last year, though, 99.53. So it's a little dip, but not much of a dip, and still a very healthy average ratio. Here was the interesting news. Active listings. Baltimore Metro, 2023. We had 2,543 active listings. This year, January 2023. We had 3,582.
That's quite a big jump.
That's a 40%.
And that doesn't bode to the theory that people aren't going to sell their houses because they're locked in at low interest rates. Do you have any idea what might have driven the additional listings?
So there could be just some pent up, I need to move, but I was holding off and I didn't want to. And they saw rates kind of normalize a little bit, slightly lower in January, and then they thought maybe I'm starting to see demand still there at 7.5% when demand kind of dropped.
Right.
We got down to the low sixes, and people thought, well, all right, I better act if I'm going to. So I think that encouraged people when they saw that demand happening that, hey, maybe it's not such a bad time to list.
Quality of life decisions can make your decision to sell a house or have to take a higher interest rate worth it. I had a conversation with a client this week who was living in the White Marsh area and working at Fort Meade, and is tired of that commute and wants to move on the other side of the tunnel in Anne Arundel County, Glen Burnie, Severn.
I used to take that.
Kind of area.
I used to take that commute. It was painful.
It's painful. So, luckily, he bought in 2020 and has a good bit of equity in that, which will help make the move. So there's two aspects to it: the higher interest rate, but the equity that you've acquired over those few years may make a difference in making a decision.
I think that the increase in equity is a huge factor in there. Right? People are realizing, well, I can capitalize on that.
Right.
So, all right.
And it's good. You don't have to. And it's not the crazy market that it was last year. So your days on the market last year it was much lower. And I guarantee you there was tons of competition because just like I said, in January rates, they were still great. They were in the three. They went from the high twos to low threes, and people said, oh, realize how good those rates are, and I made better move. So people were snapping up homes. There were still probably multiple offer situations on almost every listing out there. Kind of makes sense as to why that went out. So even though we still have a short supply of it, the higher rates are helping ease some of that froth off the market. So that's a good thing. Although
we are still seeing, in some cases, some multiple offers, but not anywhere near, to your point, not anywhere near what we were seeing in 2021, early.
The homes that have those multiple offers, the ones that, they might be listed at a really good price.
Right.
Not a high price or overlisted. And they might be totally rehabbed or
price right and HGTV ready.
Right.
And that's the magic formula.
Right. And that'll get you into a bidding war and stuff like that.
So what I guess the takeaway for a seller is with the increase in inventory, this might be a good time if you've been thinking about making the move, showing that the demand is still out there. This may be a good time to start to list because we're going to start to see inventory increase seasonally. We see that increase happening. But to see the January year-over-year increase as well, it's leading me to believe we're going to see much more inventory coming on, and that opportunity to get the maximum return may be lessening.
And I heard from people who were considering listing and thought about pre-approving, it was a common thread that I heard last year, and you may have heard it, was the concern that, I can sell my house, but I'm never going to find anything to buy. If there's a little bit more inventory out there, maybe
makes it easier to make that move.
It still has a low inventory out there when you're talking about months to clear the market, but it's improving, and some listings coming on mean there's more opportunity, or there might be more homes. It
makes the process a little easier.
It bears taking a look at it.
Yeah, absolutely.
Because you might have a specific place or home in mind, or place and home in mind, and you can contact Brad and find out what listings are out there that suit your needs, and then when you see what's out there, well, let's go ahead and list it, right?
Yeah, absolutely. Okay, well, that's going to wrap up the rundown. So, Michael, when we come back,
yes, sir,
and we talk about the scoop,
yes, sir.
Last week we talked about the home buying process part 1.
Part 2's now when you get under contract.
Contract to close and beyond.
Beyond?
So we'll be back in.
What's beyond close?
Well, you'll find out. We'll be back in a minute.
Try it.
Okay, we're back to Be Real, the Maryland real estate podcast. This is Brad Cox from the Vesta Group of Long & Foster, and joined by
Michael Becker of Sierra Pacific Mortgage. Brad, we promised everybody when we came back we're going to do our second half of the home buying process, and this is a big important part of the process. And it's when you get under contract, what happens to get you to closing and then beyond.
You get under contract, that's a moment to celebrate. So take that moment, let it soak in. You have your happy dance, right?
Yeah, especially after it's been if it's been somebody who's put multiple offers in.
Right.
Sometimes
I think we talked about that in that one episode. We talked about that one buyer I had who wrote 15 offers before they finally got their dance. Was especially happy.
Yeah, they were super happy.
Yes, but all right. So you get under contract.
Right, you're under contract.
What happens next? All right. So there's some immediate tasks that happen. A little flurry of activity right away. For the buyer, there are a few things that are going to happen right away. The earnest money deposit will be due. That's one of the first deadlines typically in the contract of sale. And depending on how the contract is written, that may be 3 days or 4 days, or by law in Maryland, it's 7 days.
Okay.
There are a lot of brokerages who have their own particular policy about how quickly you want to get the earnest money deposit in. We use an online system where we can request it from the buyer.
Oh, I like that.
Oh, it's beautiful because we can request it from the buyer as soon as we go under contract. They go online, upload the information, and we have that confirmation immediately that we can send to the listing agent, and it communicates a really positive message to the listing agent as well. That, hey, we're going to manage this. We're going to stay on top of things.
That's great. In my experience, I've actually seen it in the old days when people would write checks, that the check was never given to the title company to put in escrow. And nobody has it at that point, because one of my parts as a lender, and I'll get into that, is verifying that the earnest money deposit has come from the borrowers.
Right.
And if they haven't done that, and it's a check, it has to be deposited, has to clear, and it's the end of the process, you can't do that. So I'm forced to get an addendum stating that there is no earnest money deposit.
Which
and
you don't want to find yourself in that situation.
No, because you could be out of contract.
Absolutely.
All right.
Yeah.
Very good. That's
All right.
That's great.
So another step that the buyer will have to make right away. Typically, the terms of the loan are spelled out in the contract, and there's a set number of days for them to complete their mortgage application.
How many days is it, like, typically? Because some people want to, if they want to do a really quick close, they may make them they have to take full application within 3 days.
Right. It can be 3 days. 5 days is pretty common. 7 days we see quite a bit. We don't see too much beyond that. And in the really competitive markets, the lower you could make that number, the more appealing it was to the seller. So it's an intangible way of making the offer stand out a little bit more, right? We're going to apply very quickly. We're going to get a loan commitment more quickly. But that's one thing that they'll have to do. And then another step that they should take pretty early on is they should start getting some insurance quotes.
Really? You have them do it early in the process?
I do, because it's something that's often overlooked, until the tail end of the contract.
Right.
And then when it's overlooked, then it's a mad scramble. So one of our goals when we get someone under contract and throughout the whole process is we want to make the process enjoyable for them. We don't want them to feel a lot of stress.
Right.
And so when they wait until the last minute to get that information and have that mad scramble, that's much more stress, and it's needless. We don't need that. So that's one of the things that we do right up front. One of the things that we suggest is whoever your current insurance company is, get a quote from them. But then also, we recommend speaking with an insurance broker who can maybe shop that rate around and give them some other quotes that may save them some significant money. That's a great step and a great service that we provide for our clients. Then, in addition to what the buyer has to do immediately, the realtor is going to have some immediate steps. There's few things that will happen according to schedule, and so setting up that schedule is really important with reminders about when specific contingency deadlines occur in the contract.
Mm-hmm.
Keeping track of all that is one of the big things that we do as realtors to keep the contract moving forward and making sure that the buyer stays in contract. If you miss a deadline, the contract can become null and void if the seller chooses to push it. So we set up those reminders about all the contingency deadlines. Contingencies, by the way, I don't want to use a term we haven't necessarily defined, but contingencies are things like home inspections or a financing contingency where you say I have 27 days or 25 days to get a loan commitment, and if I can't get my loan commitment by that time, well, it's a contingency that I wrote into the contract, and so I'm protected that way. There are ways to protect
Contingencies
the buyer.
protect both buyers and sellers. Like a seller might want you to have a commitment within a certain amount of time to protect them.
Right.
The home inspection contingency, if there's something bad with the house, some great defect that you discover through the home inspection, that contingency allows you to get out of it. An appraisal contingency.
An appraisal contingency is another one. If the house doesn't appraise for the purchase price of the home, then you have to have a conversation.
There's a conversation that has to be had, and thankfully they've come back. A lot of people waived that contingency during the height of the real estate market. It was craziness.
Yes, and it was tough, and there were all sorts of gap addendums being used. Oh, we'll cover the gap if it doesn't appraise.
I have a gap addendum one right now. Huh?
Yeah, we'll pay cash in addition to whatever we are financing, and as long as the lender allows it, that can happen. But it is lessening the degree to which we need that.
The one I have is for a $560,000 house is a $10,000 gap. That's not that bad.
Yeah, that's not too bad.
And they're putting a large down payment down, so it will make a difference in their financing.
Right. Okay. So the realtor's also going to do a few other things. They're going to send the contract out to all of the parties in the transaction. So the buyer gets a copy, the listing agent gets a copy, the lender gets a copy, and the title company that the buyer selected gets a copy. So everyone has a copy, and they're working from the same dates. And then the last thing that the realtor will do kind of immediately is order the inspections. That could be a number of different inspections, but there's an inspection deadline set within the contract, so that's why we jump on that pretty quickly, get them scheduled, and we try to schedule them as quickly as we possibly can.
Sure.
So that we can get through that phase of due diligence and, rule out if there are any major issues.
Does it ever occur that you have trouble meeting the deadlines on that because of access to the property?
It has happened. It's rare that it happens.
Because everybody's motivated to make something.
They are, yeah. But there have been times, and especially during COVID, it was somewhat more of a challenge with people who were working from home, and so they needed to have access to their property during the times when home inspections were normally happening. So it was a little bit more juggling, but the buyer's agents and the listing agents worked cooperatively typically in those situations to resolve the issue.
Okay.
Anyway, all right, so then the lender...
Who's that?
Well, ideally, it's you.
Yeah, I have some tasks that I immediately have to do. So you mentioned the previous thing, make a full loan application.
Yes.
A full loan application is defined by having 6 pieces of information. In the pre-approval process, I gather generally 5 of 6 of those things.
So most of it's done.
Most of it's done. The consumer's name I
Right.
need is one. The consumer's income, or the borrower's income. I don't know why I'm saying
Also
consumer.
helpful to know, yes.
Right. The borrower's social security number and I've obtained a credit report or some other unique identifier, like an ITIN number if the borrower has no
Social Security number, right?
An estimate of the value of the property. Generally, when I'm pre-approving people, we have an idea of the house they're looking for, so we can kind of have, it might be a range, but in the pre-approval process, if they've set a limit or a budget for the monthly amount they are willing to spend, which is always a very smart move. Don't shop on dollar amounts, shop on your budget and see
Right.
what kind of homes fit into your budget, because different areas have different property taxes. Some homes have homeowners association fees, some do not.
And those kinds of things affect cash flow much more.
Right.
Taxes are a fixed
Well,
amount.
and from
right?
Baltimore City is high taxes. Baltimore County is higher than the person I mentioned in the first segment about moving or looking to move from White Marsh to Anne Arundel County. Are you aware that property taxes generally tend to be a little bit lower? The rate is lower in Anne Arundel County than it is in Baltimore County.
Right.
And these days we tend to have things like sewer service and water distribution charges added to the property tax bill, which adds to its annual and monthly costs.
Well, that's why one of the reasons why Harford County is lower, because
Same
they
thing.
have separate waste collection. You have to subscribe to that on your own.
There you go.
Yeah.
So I have an estimate of the property value, and I usually have a pretty good idea of the mortgage amount they're going to, do people have 3, 5, 10, 20, 30%? Well, how much are they putting down? Which loan program they're going to put in? So that's 5 of the 6 things. The last piece of information that I need that makes a full application is the property address. And once I have those 6 bits of information, again, the name, income, social security number to pull credit, value of the property, mortgage loan, and a property address, full application, I must disclose. I must disclose costs on those things. It's called a loan estimate.
Right.
We in the business call it the LE, just like the earnest money
There's
deposit.
an abbreviation for everything.
Acronym.
LECD.
Acronyms are everywhere. Once I have those, I have 3 days to get those out. Now, when I'm getting the loan out or somebody's under contract, the question is, where are rates now and what are they doing? And we have the conversation about locking. As I mentioned in the previous segment, it's not an exact science.
Right.
It's more of a feel thing and knowledge of what economic report is coming up or other event that could move mortgage rates favorably or unfavorably for the borrower. Their comfort zone, if some people are really scared about gambling at all and just, I know what it'll be today, let's lock it in. Other people like, let's roll the dice, see what'll happen. A lot of times they ask for my advice, which I'll give it. I'm not a big fan of floating loans. For a long time, I've seen it happen in my business where guys are trying to deliver the best rate and they get caught up in the scenario where they haven't locked and they don't have the courage to tell the borrower what's happening with the interest rate. The increase in the interest rate may damage their pre-approval because now their that monthly payment is higher than they were expecting. And if they were on a borderline with a debt-to-income ratio, especially considering the loan level price adjustments that are coming down the road that we mentioned that do include debt ratio over 40%.
Right.
It's going to be a very uncomfortable situation. I've had partners in this business who wouldn't do that and float it, and they just don't have they can't tell. It's gotten so bad because it can get bad quickly.
Right.
For rates. It's
just like what just happened.
A half point in a few days.
Right. Significant.
It would have been heartbreaking for me to try and it's not that they're getting greedy. A loan officer can't make any more money the higher or lower a rate is. They have a set commission. There's no benefit. They're probably doing it for you, on your behalf, or perhaps they're trying to deliver a rate because somebody's got your ear who says they can give you this rate, and you don't know if it's true or not, because a lot of people throw rates out there and don't mention the points or what it takes to get that rate or the terms,
right,
exact terms of that rate. But beyond that, anyway, so I just have a conversation about locking. Generally speaking, I'm a big fan of locking early in the process. Everybody knows what's going on. Like I mentioned in the example I gave in the first segment, I waited one day to lock benefited the bar a little bit. Seems to be the right move because the last 3 days has gotten worse since I locked.
Well, there's so many lenders who just have no clue about those
No, they don't.
economic reports. They don't look at any of that. They just see
lock,
the rate
right?
and they just lock.
Just lock. If you do lock, because one of the questions I always get, the locking of the reason you think about locking a loan is it offers you protection as a borrower. Your rate cannot get worse as long as you close within the lock schedule. And I generally will lock long enough to cover the date of closing.
Right.
So if closing's 30 days loan, I'll lock at 30 days. If it's 40 days out, I'll probably take a 45-day lock. If it's 31 days away and I decide to lock, I'll probably lock on a 30-day lock because the cost of a 1-day extension is less than the 45-day lock. So
Right.
you're always looking at whatever benefits the borrower the most is what you'll do. Once you've finished the application, gone on to the loan estimate, and lock the loan in, the last step for me is to get ready to submit the loan to underwriting. I will review the documentation in the file and see if it's up to date. It doesn't have to be like, I don't need on Monday your last Friday's paycheck, but pay stub generally you want to be within 30 days old or less.
Recent, yeah.
Right. If I've pulled electronic verifications for income and employment, it just means updating that electronic verification. When it comes to bank statements, I may need another additional. I might have last month's, and I might need one more month. In the case of Fannie Mae, they may need 2 months of bank statements. Freddie Mac and FHA are okay with 1 month, so I might just ask for the most recent. If I've electronically verified their assets, I just might have to update that electronic verification of assets. Yeah. So that's pretty much it. So getting ready, once they've got under contract, I've made the full application. I just need everything I need to get the loan to submit to underwriting.
Great.
That's the next step for them.
Great. So there's another partner in this whole transaction. That's the title company. And the title company has a few things that they'll do right away. So they'll open title. That's just the process of creating a file, getting things started. They'll request some initial information. They'll reach out to the buyer and to the seller to get some information about them and the property and that kind of thing. How do we contact you?
The caveat with that, just if you have any questions, because usually we tell the buyers they can choose which title company they want. We have ones we prefer to use. We can always recommend them. They're free to choose whomever they like.
Yes.
But once the title company has been chosen, they will get a request. And if they get that request and they're not sure if it's real or not, what's the best move they can make?
Ask us.
Ask us.
Ask us.
Make sure,
Absolutely.
because there's so many people out there trying to get your information, and I'd rather you feel safe. I'd rather you be safe and feel safe throughout the transaction, because I'd probably say on half the deals that I do purchases, they'll get something from title and they'll contact me or you and ask,
Absolutely.
hey, is this legit?
Yep, I hear that all the time.
Right.
So they'll set up everything, and then we'll also set up a tentative schedule for settlement based on the contract closing date so that we have an idea and we're shooting for that goal. Now, that may happen sooner. By contract, it has to happen by that date unless you get an extension for some reason. But typically, that's the date that we're shooting for.
When an extension has to happen, it's usually something that you weren't expecting.
Right. Something comes up that's just, completely unexpected. And it can be for anything. It could be that I had one situation where the buyer was unexpectedly called out of the country for a family emergency.
I told you one. I had one recent. I've had one where the seller passed away prior to that delayed it. Now, the estate could sell the home, but certain things had to happen, and that delayed it almost a month. Yep. I had, through the underwriting process, something can come up. Underwriters pull information more than I do from the credit report, and it turned out that a buyer was on title to other properties in another state, and we had to verify if there was any obligation on that. It wasn't showing up on his credit report, but that verification process took a little while because we had to contact courts in North Carolina to see if there were any liens in this borrower's name, and that delayed my closing by a week.
So things can happen, things that are just completely
just
unexpected.
Like throwing that out there because, but...
Well, and as long as you get an extension...
If everybody knows what's
going on, people, cool heads prevail.
Cool heads will prevail.
Right.
I'm proud to say that I've never missed a closing date except for these unforeseen circumstances. Every loan I've ever done, I've always met a contractual closing date, unless something. Right. And the few ideas like we mentioned make sense. Another one could be an appraisal. Have you ever had an appraiser go AWOL on you?
It's happened, yeah, and that can really gunk up the works. But there's another thing that can cause an extension that doesn't, a lot of people don't understand this, but it doesn't actually require an extension. And that's if there are certain title defects that the title company uncovers.
And they're working on fixing it.
And they're working on
Isn't
fixing
that part
it.
of the contract that they promised?
It is, but here's the funny thing,
Okay,
Michael.
I'm interested. You got my attention.
All right, so in the contract, there's this paragraph called deed and title. And in that paragraph, it states that if the seller is unable to provide clear title, that the buyer and the seller agree by signing the contract that it will extend the contract up to 14 days automatically to allow the seller time to clear that title defect. That's a really important issue because we've had situations, not on our team, but we've heard from title officers who we've talked to in detail about this issue. There have been times when a buyer's agent who hasn't read the contract has gotten somebody under contract, the seller couldn't provide clear title, they think that the contract is null and void, and they go and get the buyer under contract on another property, and they are now contractually obligated to buy 2 homes.
What happens then? I mean, I guess you hope somebody can get that,
It becomes pretty sticky. So the point is you never want to get into that situation.
Yeah, you should know that. That's an interesting. I never even thought
taught
of
the
that.
contract class when we redid the contract at GBBR, and there were agents who were surprised that paragraph was in there, and that
14 days.
That provision's been in the contract forever. So it's
title
not like it was
defects can be
something new.
minuscule. It can be a lien that may or may not be legit that showed up on the title search, the abstract search.
But you have to investigate it, and they have to clear it. Absolutely.
And it
because
takes a
the
while.
title company needs to ensure that title for
hardest-
the lender and for typically the buyer. And so if they need to do that, they need to clear that issue.
When we have Tom in here to talk about title issues, we'll talk about things he's going to go through. We're going through.
Definitely
going to
have Tom come in.
And it can be difficult, specifically when the previous title company is no longer in business.
Yeah.
Because that happens a lot.
That happens quite a bit.
So another reason to use
a title company that's been around a long time.
And it's not going anywhere.
Right. Great. So the title company is going to set up all that stuff.
The closing is set up, right?
Right. So then once you're under contract, the due diligence phase starts to kick in. Right?
You can't be sitting around with your hands in your pocket doing nothing.
Absolutely.
The clock is ticking, and it's time to start doing things.
Absolutely. So one of the first things you're going to do, as we said, we try to get these scheduled as quickly as possible, is the inspection. So there's 3, the most common inspections that happen in almost any property in the state of Maryland.
Yep.
Radon. That's a colorless, odorless gas in higher concentrations, has been linked to certain forms of cancer. I'm not a radon expert. I'm not a doctor, but it's an issue that you should be aware of. The EPA has set a mitigation threshold for radon that if the radon comes in at higher than 4 picocuries per liter, that it recommends.
How much? What was that?
4 picocuries per liter.
Picocuries?
Picocuries.
I like that.
Yes.
I'm going to have to look that up.
Well, that's the threshold set by the EPA. If it comes in higher than that amount, on average over a period of typically 48 hours or more, they recommend remediation. There may be spikes that go above 4, but if the average goes above 4.
So if the first test was above that, there's a chance that you would test again. That
you can sometimes, sure. Yep. Right, so radon, one of the first. Wood-destroying insects, that's another one. In this area, with the moisture that we have in the atmosphere, wood-destroying insects is a huge inspection to have. That's a fairly inexpensive inspection.
It's pretty easy. One of my jobs in college, I worked for Terminex. So.
Did you really?
Yeah.
Ah, okay.
We treated homes that actually showed them. That was what I did. I didn't go out, but I could spot termite damage pretty easily.
Right. Yeah. Well, you look for the mud tunnels. You look for the deteriorated wood, and the inspectors come through and they've got pry bars and screwdrivers and flashlights, and they're looking with a fine-tooth comb, really examining the property closely. All right, and then the third most common inspection is the structural mechanical. And if you're going to have just one, that's the one you definitely want to have because
Sure.
that's all the major systems. So they're going to come in and check the electrical, the plumbing, the HVAC, the heating and cooling, the water heater, the actual physical structure of the property, the roof, all those things to make sure that the property is in good physical condition for you, that it's safe to occupy it. Now, there are times that there are certain things that can't be tested, right? Like this time of year, hard to test air conditioning. You can't turn on the air conditioning when it's below 60 degrees outside, or you can damage the condenser.
Correct.
But in
You can
those
ask-
kinds of situations, you work around it. You ask for service records. You try to
there
get
you
as
go.
much
If you know somebody's been
information.
servicing it on a regular basis, you can feel pretty
Right, and as long as the furnace is operating correctly and it's got decent service, you hope that that's covered. And
No.
then you can get things like a home warranty if you're particularly concerned about
Well,
it.
and knowing the age of it, if you're buying a house and the HVAC unit was 2-3 years old, you can feel a lot better about it than if it was 15 years old. If it's
Absolutely.
15 years old, perhaps air conditioning works, but in the back of your mind, you know they're going to have to replace it at some point in
Absolutely.
the near future.
Yep. Okay. So then there's a couple of other inspections that you may also choose to have. If there's a pool in the property, again, in the summertime, it's easier to inspect those, but a pool inspection. If there's a chimney, you get a chimney inspection.
I'm sorry, I'm giggling to myself because I was just thinking, I don't know why, I was going to ask you, what if you have a pond? And then I was going to go to we got a pool and a pond. The pond would be good for you. I apologize for
I've never
interrupting.
had a pond inspection, but that would be interesting.
No, but that's a Caddyshack reference. I was
Yeah.
just making
Oh,
there.
yeah. Right.
That's all.
I didn't
For a
pick
pond.
up on that.
The pond
but
might be
you're
good
right.
for you.
Yeah.
Anyway,
All right.
Sometimes I make myself I crack
That's
myself
okay.
up.
I'll probably throw in a couple of Arthur quotes here and there. So
All right.
that is the
Chip-
best movie that was ever made. So
I know that's your opinion, but and you're
it's
entitled
right.
to
I'm
it.
right.
And you're entitled to it.
Objectively. But anyway, all right. So the chimney inspection's another one that's pretty common,
Right.
and they will check all aspects of the chimney, make sure that the damper works, make sure that the flue's okay, make sure that the furnace flue's okay. Not a lot of times people will just consider the regular chimney, but there's also a furnace flue that goes along with that typically that
We
needs
know
to be
about
looked at
that.
as well. Yep. Every once in a while, depending on where you are, if the age of the house, a number of other factors, a lot of times in Baltimore City, it's almost a given. You want to get a sewer line scope inspection, right? Just to make sure that from the property to where it connects to the sewer line,
It's okay. It's
that
not
it's
cool.
okay, right? We have some aging infrastructure in the city of Baltimore, some older homes. That can really be an issue at times, and so that's a great inspection to have, and not too expensive, but certainly great for peace of mind. If you're in a more rural property, you might have well and septic, and that's somewhat more expensive inspection. That can be somewhere around the $1,000 to $1,200 mark, depending on what you do.
And these inspections are for the borrower's benefit to make sure they're okay. But if we're doing a specific type of loan, I may need some of those inspections. If it is a VA loan, I'll definitely need a wood destroying insect or a termite or pest inspection. I would need a well, septic, and water test as well if it is on those.
Yep.
They have to meet VA guidelines, which are a little different. Conventional loan, I don't need any of those things. But if
Right.
you're on a VA loan, I do need those items.
So a few other ones, environmental. If there's any kind of, if you're near a Superfund site, you may want to have some environmental inspections. There's actually a bill that's been put before the Maryland General Assembly this year about disclosure if your property is near a Superfund site. We'll see if it passes, but it's...
I wonder if people have to disclose. Do you know? Are you familiar with anything that happened at the Exxon out in Jacksonville?
Absolutely, yeah. When that was, I can't remember the
while
year
ago.
that happened. It's been a while. Luckily, that period between then and now, the most recent tests, from what I understand, things are
Everything's fine.
basically cleared up, right? But yeah, there was a gas leak at the Exxon in Jacksonville, near Four Corners, and that area they were using bottled water. Exxon was providing bottled water for all the families in that area for a long time.
There's a
And yes, you absolutely had to disclose a situation like
there is a Facebook group that I'm a member of. I'm from Jacksonville. Where's my millions from Exxon?
that. Yeah.
I didn't live in Jacksonville, but only a few miles from Jacksonville when I grew up.
Yeah. All right, so some other things, again, maybe based on the age of the house, you might have a lead paint inspection. 1978 was the year when they stopped using
I
lead
wrote
paint.
19. Right.
But
So if the house was built prior to 1978,
it can be a good idea to have lead paint inspection. Now, if all the windows have been replaced and the doors and it's been a major remodel, there may be less of a risk, but there's still the potential for that to be there. And if that's something that you are concerned about, if you have young children, if there's, any other concerns, absolutely, you can have that lead paint test. Mold is another thing that you might want to test for, or asbestos. That can be something that can come up that can be a pretty big health risk.
So you go through all these inspections.
Yes.
Things turn up. Not everything's perfect. So when you get as a first-time home buyer, there's a lot of that's what we're dealing with.
Sure.
When they initially get the inspection report, I remember the inspection report on the condo townhome we bought in Bethany when Mindy looked at it. She goes, "Oh my God!" I said, it bears talking about this right now.
You're absolutely right, because it can be overwhelming.
There's so many. The inspectors check everything, and anything that's the littlest thing that's wrong, they're mentioning in the report.
They
They
have
do their
to.
job well.
Absolutely. And the best ones catch a lot of things. Now, they can't catch everything.
No.
It's a visual
Right.
inspection. They can't do any demo in the property to see what's going on behind a wall or something like that, right? It's just a visual inspection. But if they detect issues and they've got moisture meters and they've, they're very keen eyes.
Well, they'll mention that the moisture seems high in this room. I might have a mold remediation or a mold inspection company come out. A separate, specific inspector
Who can address
Verify their
that particular
suspicions.
issue. They do a lot with roofs.
Right.
If the roof looks a little older, you might want to have a roofer come out and evaluate it. Correct. Absolutely. Okay.
So they get that report.
They get that report.
There's a lot of things wrong.
There's a lot of things wrong. We talk through things, and here's one thing that I want to urge all buyers to keep in mind with regard to the inspection report.
Okay.
It's a house. There will be things wrong with any house, even new construction. We have home inspections come in for new construction. I remember one home inspection, all the wiring on the first floor for every outlet was reverse polarity. Every single outlet. So the point, and new construction, there's a county inspector typically who goes out and checks that property. So
Yeah,
the
you
point
need the
is,
certificate of occupancy, and they got to inspect it, right?
But the point is, don't forego these inspections because they can be really important. Yeah, even in a new home. Yes, but
you decide. You get the report. You go through it. You decide what's most important.
right.
What
And
you
the point that I was going to make
Okay,
is
sorry.
that there will be things wrong,
100%.
and that's okay. What we want to focus on as buyers when we buy a house is making sure that the structure is sound and that the property is safe. So we're looking for pretty big health and safety issues, and that anything that's really expensive is going to be okay, right? So the HVAC, the water heater, big plumbing issues, big electrical issues. But if they say this closet door doesn't close correctly, that's not an item that I would ask a seller to replace. Now, it's not my decision, and if my buyer insists, I will go forward and ask for that to be repaired. But that's not typically the kind of things that you want to address with a home inspection.
Right.
Okay.
Right. So you have to have that conversation. You
Yes.
can't ask. If you ask for everything to be repaired, what is the response typically going to be
From the seller? No, thank you.
No, thank you. We'll put it
Well,
back on the market.
put it back on the market. Absolutely.
So you have to pick and choose.
You have to pick and choose, right? So you have that conversation, and then typically you put together what's called a property inspections notice. That's the That's the form that we use that communicates to the seller, hey, we had an inspection, we found these unsatisfactory items. We'd like to have them dealt with either by a repair by the seller or potentially, depending on how you write it, a credit to the buyer so that they can make those repairs down the road.
And a lot of times, sellers would give the credit and let the
Could be a lot
buyer do it.
easier
Well,
for
because it
them.
can take, if it's not something that affects the safety and soundness of it, it's going to affect your ability to close on the loan. It's probably easier because the time constraint. At this point, after the inspection reports come back, you may be 2
2 or 3 weeks away from settlement.
From settlement, and sometimes getting a contractor to repair something like that might be quick.
Right.
Now,
Which is one of the reasons why we try to jump on those inspections so
it's
quickly.
very smart. When it comes to getting these credits, you must remember that there are limits on the amount of credits you can get from the seller.
Great point.
Depending
based on the loan type.
The loan type, down payment. I'll go over it real quickly. When you're doing FHA or any government, 6% with FHA. VA allow you seller credits to pay for everything. You get basically the borrower. It can be enough to.
It's a great protection for our veterans.
Correct. When it comes to conventional loans, and conventionals are the most often used loans. They're the predominant. Conventional means Fannie Mae, Freddie Mac. Anything that's a non-government loan is a conventional loan. When you put less than 10% down, the max seller contribution is 3% of the sales price.
Right.
If you put more than 10% down, 10
But
to
less than
25%,
25, yep.
it's 6%. And if you put 25% down, you can get as much as 9%. I don't know what you would do with 9% seller help. Never seen anything that high.
That's a lot of seller
help.
help.
And I generally haven't seen 6%.
There'd have to be a lot wrong.
Generally, it's in, I would say, the 2% to 4% range, generally speaking, is what seller contributions or seller help tends to be.
Yeah.
But the reason that's important is if you've negotiated that in the beginning of the process as part of the contract, and then there are other things to add to that, you might run up against that limit. So it's just something to keep in the back of your mind.
To your point, if you've asked for seller help as part of the purchase, and then you have some issues with the inspection, you may not be able to get the help that you need.
Right.
Yeah, good point. Okay, the other due diligence item is something that's ordered by the lender, the appraisal.
Right.
Right. So what is an appraisal, right? So that is a third party, uninterested party's opinion as to the value of the home. That opinion can vary from appraiser to appraiser, but by and large, you'll get a value that comes back.
It's important to remember that it is an opinion, and it is unconnected to me. I do order it, but it is a random process. Most lenders have multiple AMCs, another acronym which stands for Appraisal Management Companies, who they order appraisals through. They in turn contact appraisers out there to accept the job. And then once this person has been accepted and approved by the appraisal management company, they reach out to the listing agent to set it up. But you're right, it is an opinion. And they can be different. The good news is when it comes to an appraisal and a purchase, the appraiser does have the sales contract, so they know what the sales price is.
And that's a part of that consideration. Two presumably reasonable parties agreed to this particular value for this home.
Right. Now, if somebody's overpaying greatly on it and there are not the comparable, that's the whole thing we talked about gap.
With the gap, the gap
protection, right? Or people willing to waive their appraisal contingency, meaning if it doesn't appraise for the sales price, they'll make up the difference. A lot of these things happen in the past, but when the reason the appraisal is important, the value that comes back on the important from the lender's standpoint, when you're buying a home, the value of the home from the lender's standpoint and calculating loan-to-value limits and such is the lesser of the sales price or the appraised value. If a home appraises more than the sales price, your loan-to-value does not lower. You get no benefit other than knowing that you're getting a pretty good deal on the home.
Right.
If it appraises less than the sales price, then a negotiation process has to happen or the buyer has to make up that difference.
Right.
So, anyway.
Okay. So, great information in the due diligence phase when we...
I didn't mention how much.
Right. So, the average appraisal.
Depends on the type.
Size of the home.
Government, size. So generally speaking, it's in the 500 range, 550 range. Bigger homes, waterfront homes, there can be an additional surcharge. Government loans, VA, FHAs, because there's a little more to the inspection process, might cost a little more. VA has its own roster. You don't contact an appraisal management company when you order a VA appraisal. They must be approved from the VA, and you order directly through the VA portal. They can be a little bit more than a conventional, but I'd say $500 to $600 is
good.
Typical these days.
It's a good yardstick. pick. Yep.
But, a really complicated large property, waterfront property where the comps they have to search much further out, you could see $1,000. I wouldn't be surprised. And we're talking about our specific area. There are areas in this country where appraisals are so short that they're getting a lot more money
Right.
for them. So, anyway, I just thought that was mentioned. But
No, that's great.
you wanted to lead into the
Yes.
next segment.
So, yes. So we talked a lot about the due diligence phase. When we come back, we're going to talk about all the logistics and the final details right before settlement and beyond.
Trap.
And welcome back to the Be Real podcast, the Maryland Real Estate Podcast. I'm Michael Becker of Sierra Pacific Mortgage, and as always, we have the bright and witty Brad Cox of
the Vesta Group of Long and Foster.
I had to.
Bright and witty. Wow. I feel all warm and fuzzy now.
You should. You should. All right, what were we talking about prior to the last break there, Brad?
So up to the break, we were talking about the due diligence phase. Now we're moving into the logistics and final details.
So we've wrapped up a lot of things. We went out and searched homes last week. This week we got you under contract. We've gotten the appraisal. We've gotten the home inspection. We've done a lot of things, and we're coming down to the finish line.
Right, getting close. So, some tasks for the buyer during this phase.
Okay.
One big one is picking a mover. And sometimes, if you're younger and you want to save a little money, you may decide to go it on your own
And a few cases of beer.
get a couple of, absolutely. And
hit up your buddies.
And that can be great. When you're our age, that kind of goes out the window. Yeah. But a mover is really important, and not all mover, just like not all lenders are the same, not all realtors are the same, not all moving companies are the same. There's a number of great moving companies out there. Ask us if you'd like to have a moving company, if you want to hire a moving company, we can make some recommendations for you.
Absolutely.
Yep. There's a process before you decide. Well, you got to decide what you're going to move.
What you're keeping and what you're getting rid of.
Yeah, so I like to call that the chuck it or truck it phase. Chuck it or truck it phase, right? It's because if you keep it, you got to pay a mover to move it.
Yep.
Right? So you can either sell stuff, donate stuff, or trash stuff, depending. But it's a great opportunity to go through your stuff. I love what George Carlin used to.
Oh, that's hilarious bit
Right?
where
If it's other people's
now you got to buy a
stuff-
house to put your stuff in.
Well, yeah, but then he said, if it's other people's stuff, it's something else entirely. If it's your stuff, it's stuff.
It's stuff.
If it's other people's stuff, I'm not going to say. But
Moving is a good time to get rid of a lot of the useless stuff that we've held on to for one reason or another. Now, you don't have to be a hoarder to keep things.
We
that
have
you
3
don't
sets of
need.
china from
Oh my gosh.
various
Oh, boy.
family members who've passed away. Absolutely. So, and we're in that process, right? We're of a certain age. We're going through the purge.
Well, it's speaking of China.
we're not even moving right now, but
Mindy's
it's
mother's
important.
still alive. She has her mother's china. We
Mm-hmm.
had never used it until this Thanksgiving. We decided to break it out and use it for Thanksgiving.
Very nice.
So
Yeah, we never use ours. We have some really cool blue dishes that my wife got that we love, and we use them every day. It's we're fine. But yes, 3 sets. So the point is, you don't necessarily need to pay somebody to move all that stuff. So decide.
you can donate it. You get a tax write-off. So
Yep.
if you're somebody who's thinking about you're gonna have now I'm gonna be itemizing my deductions because I have mortgage interest.
Absolutely.
If you have some things that still have some usefulness left in it, think about donating it and getting the charity write-off.
There are other people who may be able to
You
use
benefit
that.
it. That's a win-win. You get a little write-off. Somebody gets your stuff for free that they could utilize.
Absolutely. And then there are certain things, maybe they have value, and you can sell them, right?
Sell them.
I mean, Facebook Marketplace, some other,
And it's so much easier to sell things quickly that way.
Yeah.
Anyway,
Very
so
nice.
they're going to chuck it or truck it,
Chuck it
sell,
or truck it.
donate, or trash it. Trashing it. Think of the industries that were created from getting rid of your old junk. When I hear
college hunks.
Oh, yeah, those
or,
guys.
Any of those, right? I mean, there's so many.
And it's a lot easier, believe me, folks. I mean, it's if you have one or two things, going to the landfill. It's not if I live in Owings Mills, Cockeysville landfill's not far. If it's close by, then you could think about doing that yourself. But if you got multiple things, pay somebody
Absolutely.
to do it for
you.
Okay,
so then you go through the packing process.
Mm-hmm.
Now that's a conversation unto itself. There's an art and science to packing, I believe, because I'm super anal about everything. But packing's important. You want to make sure you're packing light things. You want to pack for the night that you're going to be in that new house. The first night, have a separate box that's here's all the essentials.
What we need
for
immediately.
What we're going to need right away.
Right.
And then there are certain things that may be packed that are going to go, that's going straight to the basement in the storage, and here's our clothes.
Well, when you have a major move, it's not, unpacking is not something that happens in a day. It happens over a period of a few weekends, I would imagine.
Could be several months, depending on how much you take and how long it takes you. Yeah,
or
absolutely.
if you're a procrastinator.
Yeah.
Right.
All right. So another thing the buyers are going to do is finalize their insurance. They may have talked to, as we mentioned in the previous segment, they may have talked to their current broker. They may have talked to another broker to shop their rate around.
Sure.
But at some point, you've got to finalize that decision, and it has to be that information.
And you have to sign something, generally speaking, to get the binder to finalize that insurance policy.
Yes, absolutely. Okay, so about 10 days out, you're going to want to set up your utilities.
Piece of cake. It's not as hard as some people think.
Super easy. You can even do it online most often. And we'll send you a link. We'll send you a link and the phone number, depending on how you want to do it. But set it up to start the date of settlement, especially in the colder winter months. You don't want the seller to have canceled the utilities, and then you haven't started them right away.
Right.
So that's an important thing to keep in mind. Any requests that come in, especially requests that come in from your lender or title company, just make sure you respond to them very quickly. And then another thing that you do as you get pretty close to the tail end is go to the post office and report a change of address. And there's a number of other things. We'll send you a list. There are a number of other things that you might not think about for changing your address.
Can you do? I imagine. Can you do it online now? Or do
you probably can. We regularly get buyers who move into properties and the seller forgot to do their change of address, and they're still getting mail, Amazon packages, all sorts of things after they've already settled on the home.
Right.
So, the change of address is super important. Then there's the task the realtor needs to go through. The
buyer does all their stuff, and you're up next.
So the realtor's going to be doing a lot. There's a lot of communication that goes on during this phase because it's wrapping up the final details. So we're communicating regularly with the buyer, with the lender, with the title company, with the listing agent, letting them know all the contingencies are through, that we're ready, we're good to go, and then also arranging for the final walkthrough. That final walkthrough is the step right before settlement where you're just going through and verifying, hey, the house is as we expected it to be.
Typically, unless it's a very real early in the morning closing, it happens the day of settlement.
Very often, Now, if there were a lot of repairs done that the seller did, you may wind up going. You may want to go a day or two before and then still go the day of settlement. We've done that plenty of times because you want to verify that the repairs were done in a satisfactory manner. But typically, and we never have early morning settlements. To be honest,
that's a great idea, and I always think it's a bad idea to do it first thing in the morning. Because
why it's bad?
Why?
You know why it's bad? Michael, you know why it's bad. But lenders typically wait until the day of settlement to wire the loan funds.
And it takes a few hours for it to clear. And I've had
so if you have a 9 a.m. settlement,
they've been sitting there.
You're sitting there twiddling your thumbs.
When you're dealing with us in Sierra Pacific, if we had a morning, we would send it the day before.
Typically,
but a lot of times you're right. It can happen, and that can hold it up. But after you've done the final walkthrough as a realtor, then there's tasks for me as the lender that I have to do. And
absolutely.
First, you mentioned here something about loan underwriting. Well, I've submitted the loan right early in the process, but the loan gets approved, and it's very infrequent that you get a loan that is ready to close after initial submission. An underwriter will review the file which you've submitted. They will also do their due diligence and pull a report called Data Verify, which allows them to verify certain aspects or look at other things. If there's potential other ownership, other debts that weren't disclosed in the credit report, they're looking to make sure there's nothing that's going to make this loan riskier that you don't know about. On loan approval, we'll generally get some conditions that we'll need to clear before the underwriter will sign off on the loan to clear to close. If I've done my job ahead of time, it's generally not a lot. It's generally title work, insurance, maybe an updated pay stub.
Yeah.
Something very simple. The worst thing you could do is to get an underwriting approval that'll have. And here's another short term. It's not an acronym, but it's STIP. It stands for stipulations. If you get an underwriting approval that has 24 or 30 STIPs, you have not done your job on the front end of the mortgage. Now, the loan still can get approved, but that's when you're running around, and that can be aggravating for everybody involved.
Right.
Borrowers love it when you ask for the stuff up front, and then when you get the approval and you ask for things. Now, there might be something. I'll give you an example where I didn't see it or might have missed something. An underwriter might review a bank statement and see a deposit that's large, and what's defined as a large deposit. Typically, it varies from loan to loan, but on a conventional loan, it's anything that's over 50%. I may have missed that, may have not have seen it. It might have been at the bottom of the line, and they might ask for the source and seasoning of it. Now, if that borrower has more than enough money to close and that deposit doesn't factor into the deal, we can ask them to back that out of available sources of funds, and that they can do that. But if you're constantly going back,
Buyers hate that.
it bothers them. They think when you get the loans approved, this is what we need, right? Generally speaking, when you get everything that's been asked of the underwriter, you should be done at that point. Something you submit might cause the underwriter to question one more thing, and you might ask for one thing. That's generally okay. But if you ask somebody for 4 or 5 things, which already is a lot if you haven't done it at the beginning,
right,
and that borrower gives it to you, then
or what's worse is asking for it again, even though you already have it.
Right.
I've never seen you guys do that.
No. Well, believe me, because sometimes the hard part is you have good borrowers who send you everything the way you send it in one email using the secure link, and then you have other borrowers who will text you on their phone. They'll email it once time to you. They'll use the e-fax. There'll be 7 different sources of documentation all over. You gave them a list, and they send it to you. And I try to. I
took a picture of my bank statement. Here that is, and here's the right. Yeah.
Yeah, and even though it says you gave me 4 pages, it says page 4 or
5.
Page 5's blank. You haven't sent it. I need that from you. But I always put that in there when I request it. I need your bank statement, all pages, even if it's blank. I generally put it in there. You don't just need the cover. We need to see all pages and things like that. But if I've done my job, the underwriting approval is pretty simple. A few conditions or STIPs. We approve them. Once I have in a bit of documentation, I could send out the closing disclosure. You have a little bit later, but I think I should mention it about now. We need a few items to send out a closing disclosure.
Okay.
We need the loan approved. We need title work in.
Mm-hmm.
We need an appraisal in, so we know the value of the home. And we also need just at least a quote from the insurance company to get an idea.
Right.
The closing disclosure is shouldn't be very similar to the loan estimate that went out in the beginning, but this is the number that's going to come out and show you what your monthly payment is, what your interest rate is, what your APR is, and it'll itemize all the closing costs and give you a number for your cash to close, which will be the sales price minus your loan amount plus the closing costs or settlement costs, and your earnest money deposit gets deducted out of that cash to close number. Once we've gotten that out, typically the loan goes from the closure back to the underwriter for final conditions and a request for clear to close. Greatest words we can get in the mortgage lending.
The 3 best words in real estate.
Or we don't even it's letters, right? CTC.
C to C, right? CTC.
Clear to close. Everybody knows what that is. Everybody's happy. We're ready to go. And at that point, I'll know what the number is for the borrower for cash to close. After this, there's a balancing thing to go out. And we'll talk a little bit about that the 3 days out that has to happen. But once I know the final number, I will give that number to the borrower. Now, there are occasions, Brad, and it bears mentioning here, that for one reason or another we're coming down to the end and it's a little jam-packed. Time's coming close to closing. And I may not have that final number. Somebody might be waiting for a number, whether it's from the homeowners association fee.
That can happen.
There's a final number that's not out there that I don't have. In that instance, if I have an idea what the cash to close is, but I don't know exactly, Let's say it would be 19. I think it'll be 18,500 to close. I would probably say, hey, do me a favor, just wire 19,000 to the lender. That way your wire's there, and if you overpay, the title company will give you the difference at closing. That's always a safe way to do it. Preferably, you'd like to have the exact number, but for one reason or another, you might not have that exact number leading into closing, and you want to get that wire sent so there isn't anything that holds up closing.
Right, and the title company will give you a check right at
Right
the
at the
table.
closing, right.
Yep, absolutely. Okay, so thank you, Michael. So the title company is also going to have some things to do during this phase. They're going to order and review a survey, and they're going to let you know if there's any issues with the survey. We just had a settlement close just the other day where there was a shed, minor thing, right? A shed that was encroaching from one property onto another.
A neighbor's shed that was
Shed that was on their property. The worst one that I have ever seen was, it could have been a big issue, but turned out to not be a big issue, was that the seller, and I represented the seller in the transaction. The seller had built a 3-car garage in a utility easement on their property. And that got detected during the survey, and it was actually a friend of mine, and it was it was a painful process.
I imagine.
But luckily, the buyer said the likelihood that the utility company is ever going to have an issue with this is so infinitesimally small that I don't care. And he waived that. And it was completely his decision. We advised him of, any of the things that could possibly happen. He signed off on it. They've never had an issue still. But the point is, that can be a problem. So they do that survey just to verify that the property boundaries are
accurate,
unviolated, I guess. Is that the right word? That's not the right word, but
not violated.
I think I'm going to go with that. It's unviolated. It's great.
That's fine.
And
we know what you meant.
That's
you don't want to have
become the
anybody
term that's
encroaching on
adopted.
your property lines.
Right. Yeah.
That's what you're trying to.
Yes. Right. Anyway, they're also going to investigate title history. That's a big part of what title companies do. They're going to look for the chain of title and make sure that it's clear through all the different transactions that have occurred on that particular property that the title was handled correctly, and that's all part of the title verification process. They're also going to look for, investigate, and resolve any liens that have been placed on the property. And liens could be from a number of sources. It could be a tax lien, could be a mechanics lien if the property had some work done on it and the homeowner failed to pay the contractor,
right,
and they put a mechanics lien on. But any of those liens have to be resolved before the property can be sold to the buyer. So they're going to look for any of those other issues.
And in most cases, it isn't complicated, but more times, it does happen on occasion where something pops up.
Right.
Especially when it came to the shoddy work that was done during the housing crisis. And these things go back to 2005 to 2008. Many title companies and lenders are out of business and finding the liens. In fact, some people have been able to get away without paying liens because they couldn't find the paper trail.
Well, there's also issues with getting lien sheets from certain municipalities. Like right now, they're struggling with a very difficult situation. Half of the department retired at one time. 4 members of the department in Baltimore City retired at one time. Wow. That produces the lien sheets. And so a lot of title companies have been having to escrow an estimated amount.
Right.
And then, Lord willing and the creek don't rise, it's below that number that they've escrowed and they're okay. But sometimes liens have been detected that have exceeded that number, and then they have to go back to the seller and say, you have to pay us more money to release these liens.
That's never present.
It's never good. Yeah.
That's
so, and that's a rare situation, but it sometimes can happen. So one of the things that the title company is going to look for. They'll also look for things like we mentioned earlier, easements on the property, right? If there's a utility easement or things like that, conservation easement, they're letting the buyer know that any of those issues are detected. And then they're going to work in collaboration with the lender and prepare that final.
And this is where I think I should talk a little bit about it. So by law, because I'm going to 3 days out from closing, you must send a closing disclosure to the borrower. Now, it doesn't have to be the final closing disclosure. Once the loan is underwritten and approved, and we have those items to send out the closing disclosure that I mentioned, loan approval, appraisal, title work, and a quote for the insurance, we can request me as a lender, I request from my company that a closing disclosure be released. I generally don't wait for that 3-day out. As soon as I can get it out.
Right.
I will often get the first initial closing disclosure out a week or two before closing. I'll get it out as soon as I can. There's no need to wait for that 3-day window because something could come up. And then if you don't get it out, you cannot close. It must go out 3 days prior to closing. So the loan gets transferred temporarily to a loan closer. It's a person who will prepare the closing documents, everything that's signed by all parties, as well as the closing disclosure, and they will also order that wire. Now, the initial closing disclosure that often goes out may not have all the information on it. But generally speaking, the fees that you're going to pay to the lender, government, and title, and
They're known.
They're known, and they are stuck. Now, if terms change and the APR is increased by 1/8%, a new closing disclosure would have to go out in another 3-day waiting period. It only happens in rare instances, and I'll give an example of an instance where it may happen. Borrower might be finding themselves, because of expenses for home inspection or things they had to do early in the process, they might find themselves a few dollars short of cash to close. And instead of paying a little bit of money to get let's say 6%, they are going to go to 6 1/8, where they'll get a little lender credit. It'll reduce their cash to close. But that increase in rate late in the game will require a new closing disclosure to go out in another 3-day waiting period. It doesn't happen often, but occasionally.
Right. And hopefully your buyers are not so
it shouldn't
close.
get to that point.
Yeah, that you're and hopefully you've planned so that you're not so close that that's the only available cash.
It doesn't
that you
often
have.
get to that point, but it does happen occasionally. Last thing we want to do is delay closing, so we do it. So once the initial disclosure goes out, it's okay if the borrower signs it. You're not legally obligated by that initial closing disclosure. It just states that you've been disclosed the monthly payment, the rate, the APR, all those things. Those are things there's things on it that cannot change. Things that can change, and most often, are the prorations. And what I mean by proration, the seller of the home has paid taxes through the year or through the semi-annual payment. You must reimburse them. There might be a homeowners association fee that has to be prorated between the buyer and seller that they've already paid that you may have to reimburse them. Right. There's a water bill that may be coming due, and the title company to try and prorate it between the buyer and seller. Those are things that can change the cash to close. Once the initial CD goes out, generally speaking, the title company and the closure from the lender will get together and go back and forth. And hopefully it only takes once or twice. It can be frustrating when it takes 6 or 7 times to figure out why they're not balanced, but they will balance their closing disclosures and come up with a final number for closing. And that's the process that happens after the initial disclosure goes out. But that initial closing disclosure, or CD as we call it, must go out. It's important to know. It must go out 3 days prior to closing. If the APR at any point increases by more than 1/8%, a new disclosure must go out, and a new 3-day waiting period must start.
So let's hope we avoid that.
We do. I've never had that happen.
Right. All right. So then the day before settlement, there are a couple of things that the buyer should do. The wiring the funds to the title company. All the title companies, almost all title companies now want to wire.
It used to be a certified check. I have to go to my bank and get a certified check, but now it's a wiring process.
Right.
It's just safer for people, everyone involved.
Right. But we also should talk about the safety with wiring. That's another.
Well, make sure you're going to get instructions on how to wire.
Right. And typically that's going to come from the title company, and ideally they've done that through some kind of secure portal.
They all
communicated
have.
That. Yes.
Qualia is one that a lot of.
Qualia is very often. Sage Title, the group that we use quite often, they have a portal called the Exchange.
The Exchange.
But,
okay.
Yep. But it should come through a portal. They shouldn't be emailing you a copy of your wiring instructions.
That is a big fraud issue lately, and title companies will tell you on their process, make sure it comes from us. If you have any questions as to it, I often get involved and actually get, I make sure that they're sent securely to the borrower so they know it. The wire instructions will have an account to wire it to.
Yep.
They'll ask you to reference the property, and it'll give you the bank that it needs to be wired to.
Right. So you take those wiring instructions and the closing disclosure, and that has the cash to close number on it. And as Michael said, there may be times when you may want to wire a little bit more than that amount.
Up in the air last
usually,
second.
But usually it's
usually
that
the day
number.
before I know it.
Yeah. So you take those 2 pieces of paper and you say to the bank, I need to wire this amount of money into this account using this information, and they take care of it. Now,
Sometimes
here's
it
another.
can be done online, the
Sometimes
wire, but
it
a lot of
can.
times you do have to go in
Yeah.
person.
Now, one thing that I'll say about wiring is make sure you verify when the bank hands you back the confirmation. Make sure you verify that the account numbers are matching. And there have been times, albeit very few, but there have been times when money's been wired to an incorrect account. Now, bank, they're FDIC insured. They have to take that money back, pull it back, put it into your account. They'll fix the situation. But if that happens, you want to head that off before you head to settlement. So before
Well, it's pretty
you
easy.
leave,
They print it out. They'll give you a printout.
they'll give you a printout of it. So just verify that information is correct before you leave, because you don't want to get to the settlement table and then realize later, especially if your settlement's late in the afternoon, bank's already closed, and then you can't settle because your funds haven't been wired to the right account.
Your funds aren't there. You don't want people sitting around waiting for a wire to hit that may never hit.
Yes, right. And then, Michael, we mentioned the final walkthrough. That's typically it could be the day of settlement, or it could be the day before, depending on what's going on, or maybe a couple of days out if there were a lot of repairs done. But we're going to send you a checklist, things that you want to check. But you're checking to make sure that things are as they were when you signed the contract, or as they're supposed to be if any repairs have been made. Right?
Mm-hmm.
Okay.
Walkthrough's done. CD's been signed, balanced. Final number's been given to the borrower for closing. They have wired their funds to closing. The lender has sent the closing package to the title company and wired their funds for closing.
As have the buyer.
What happens now?
It's time for settlement.
Settlement!
It's a great time. Yes, as everybody's typically pretty happy, and
Usually.
usually.
Unless it's a divorce case and both sellers show up at the closing table.
Don't like those. I don't like those.
I've been through one of those as well.
They're not fun. Yeah. They're not fun. But lots of times, and sellers, in that situation, lots of times they'll pre-sign separately so that
usually that's the smart way to do it. You don't want to instance. Here's I'm going to do another reference. I did Caddyshack earlier. Another comedy that I like is Wedding Crashers, where they were mediators, and I think it was. The girl from Risky Business. I can't think of her actress name.
Rebecca De Mornay.
Thank you very much. And it was a country singer who I can't think of his name either. Is the husband, and they were
right. Who was that? Now I can't remember.
I'll think of it. I'll look it up. You keep talking. I'll look it up.
Yeah, but anyway, all right. So you're going to settlement. Couple of things. Everybody on the contract has to be present to sign. Now, like I said, the sellers may decide to pre-sign. Buyers can't pre-sign. Buyers have to go the day of settlement, and you must be present. And all parties must be present, right? So if you're named on the contract, you must be present to sign at settlement.
Well, what if there is a limited power of attorney for somebody to sign?
Right. So that's a good point. If say you have this happens quite often in the military.
In the military,
you have somebody who's
you're moving across the country if it's a long move.
Right. There's all sorts of circumstances when you may have the need to have a power of attorney. Now, I will say not all power of attorneys are created equal either. You want a power of attorney that directly references the ability to execute real estate
you can't
contracts.
use a general power of attorney
cannot.
for settlement closing. It must be a specific power of attorney,
Absolutely.
specific to that transaction.
And typically you can get those from your title company. So
everybody has to be present, but I was just wondering.
There may be, there can be exceptions.
Well, can I give you the name of the country singer who was?
Who was that?
Dwight Yoakam.
Dwight Yoakam.
Rebecca De Mornay.
Right.
Anybody listening who's seen that movie is going to giggle.
Yes.
Anyways.
All right.
So
another thing, title companies have typically several settlements set up throughout the day, especially at the end of the month, which is the worst time, by the way.
Last Friday of the month.
The last Friday, it's the most heavily used, and it's the worst time, in my opinion, to settle.
Why is that the people? It's kind of gotten away from that, but why is it? It's just because people.
You can close any day. Honestly, it's the worst. The end of the month, the last day. People try to shoot for that, but it's the worst day of any of your choices. That's the day that you want to avoid, because it's a nightmare. And if anything happens, and as we've pointed out along the way here, there are times that things can happen.
Well, it's hard to get it rescheduled that day if something
Right.
has to bump. If you're bumped for one reason or another, there's a delay, and you want to try and close later, that the closing book could be booked for the day, so you're making it impossible.
Right.
If
And
you're going to
let's-
close that day, make sure you get everything done well ahead of time and you're ready to close.
Yes. Let's say that, because if you've got moving trucks standing by, you don't want to delay. But anyway, all right. The other thing is arrive on time. It's an appointment, so make sure that you're there because, again, they're going to schedule back-to-back settlements. You need to respect the title company's time. They've allotted a reasonable amount of time for your settlement, but they're gonna have another one right after that, and there are going to be people waiting in the lobby typically to come in and use the conference room that you
Especially
just
if you're
used.
somebody who's new to the process and wants some good explanations of the things you're going to sign.
You may need some questions. Or
You might have some
absolutely. So
questions.
if you're late and then you ask a bunch of questions, that can really affect that whole day. Okay. The other thing is bringing your government-issued photo ID. That's super important. One thing that we recommend,
I know.
if you look at the stack of papers that you're going to sign, do a couple little finger
You're
limbering
going to sign your
exercises.
name more times than not. And
You absolutely are.
If you're the person who's signing via limited power of attorney for someone else, you really got to limber it up.
Because
you
you're
don't
going to
just
sign
their
your name.
No, it's not their name. It's,
No, it's that you're signing their name, then your name, and then the fact that you're the power of attorney for that person.
Right. It's like a sentence you're writing.
Right. That's a nightmare.
painful.
Yes,
It's
absolutely. So typically, plan for about 90 minutes or
People
so.
always ask me how long
Yeah.
is it going to take.
Yeah,
And
right.
I ask
That's-
them, it's your call. It depends on how long, how many questions you have, and how thorough you want the closure to be to go over documents.
Right.
Most professional closures will explain every document they're about to sign,
Right.
and what's going on through the process. But if you have more questions, it might take a little bit longer.
could
And
take
there
a
are
little
people
longer.
who,
Sure.
for example, one of the forms that you sign is a deed of trust.
Mm-hmm.
Deed of trust says you can stay if you pay, you got to go if you don't.
Right.
Basically, it's 15 pages.
Yeah.
There are borrowers who like to read it.
That can take quite a while.
If you're somebody who would like to read it, out of respect for the closing,
Ask for
closer,
it ahead of time.
ask for it ahead of time. I'll be happy to provide it to you.
Yeah. Yep. Great advice. Okay. So the closing agent or the attorneys, they're going to review all that paperwork. They're going to conduct the signing. Once the signing is complete, there's the ceremonial passing of the keys. And it's a great feeling, right? Usually it's a fairly good transaction. People have been
Well, that's
reasonable,
when
right?
it's very happy. A lot of times when it's been a pleasant situation, I've seen sellers gift the buyers a little something, a bottle of champagne or something little like that.
I've seen hugs.
Hugs.
I've seen some sellers have done some really nice stuff. They prepared a booklet for the buyers. Hey, here's the best pizza in the neighborhood. It's really great.
But it is a ceremonial passing because those keys may only be used one time. Probably should only be one.
Well, they should.
One or two times.
And that's a great point because I didn't actually have it in my list, but that's one of the things a buyer's going to want to do pretty quickly after settlement is change the locks in the house. Yep.
And then you don't have to be that handy to do that. It's a pretty simple process.
So moving day comes and the truck's in the driveway. If you work with us, by the way, on moving day, you might just get a little special surprise. Not going to tell you what. But we've done this quite a few.
Yeah, Brad's going to show up and move your heaviest items in
That
your
is
house.
not going to happen. Although I have carried things in and do regularly carry things in to help things move along. But yeah, absolutely. All right. So you've moved in, you've got your stuff in the house. Start exploring, right? Go out and check out the neighborhood. You've just moved into this area. If you don't know it well already, get to know it. This is the area you're going to call home for conceivably quite a while. So try the restaurants, pick out your favorite pizza delivery, find the best dry cleaner in the area, your favorite grocery store, or whatever.
Find a grocery store. How about a park or trails?
Or trails,
Or,
absolutely. Bike paths, any of those kinds
those
of things.
things.
Right? It's just about
Download the All Trails app so you'll know all the trails that are
great
close
app.
by your house.
Great app. It's just about getting to know where you're going to call home for the next, conceivably several years. So, all right. couple of other things to wrap up. About 2 months out, you're going to get and that's a ballpark, right? Because it's got to come from a government agency, so it could be a little longer. But around 2 months out, you're going to get a notice from the state, and it's going to give you a number that you can use to apply for your homestead tax credit. That is a super important thing to do. Every buyer in the state of Maryland should make sure that they apply for their homestead tax credit. Depending on the county where you live, what it does is it limits the amount by which your property taxes can increase.
Correct. It's not going to give, so it will, there's a cap, and it varies from county to county.
Right, like Baltimore County, 4%.
4%. It's the most your property taxes can go up if it is an owner-occupied property. Cannot be
correct.
A second home or an investment property, only on a primary residence, and it's smart. The year after you close on it, like if you close in the tax, it's the middle of the tax year, it's post July 1st,
right?
You're going off of that previous owner's taxes. If there is any kind of tax credit, that will get added into your tax, but it's important it gets reset.
Yeah.
That level where taxes can only increase. And it's important to file for it. I've seen people who I've closed to, I've given the advice, given the link, and years after the fact, their taxes have gone up a lot, and they never applied for it.
How'd you like to have been somebody in the past 2 years who never applied for their homestead tax credit, and then they just get reassessed this year? The central portion of Baltimore County
got reassessed,
and all the tax assessments came out. Those who hadn't applied for that, because of the significant amount of appreciation, may have seen a much higher number than they were anticipating.
You know, you can thank my grandfather for this. You know that? He's the one who got it
Explain, really.
He went around, he saw how much property taxes were going up. He lived right up the road. You go up to Ruxton, Balloon Avenue, over that way. He started a petition in the late 80s to get signed to put a cap on real estate taxes.
How about that?
Yeah.
What was your grandfather's name?
John O'Neill, John D. O'Neill.
John D. O'Neill, we love you.
Is it great? I mean, he lived in Ruxton, so the people were relatively well off, but they were still retirees and on fixed incomes, and he saw property taxes going up so much.
And it affects everyone.
And if you live a long time, you know,
that can be
even though you were wealthy in your working life, your assets can be running out if your taxes are going up. Yeah. In addition to that, if you are somebody like that, there's also, you probably won't apply for it if you're buying a house. But if you've lived in a house, there also, if your income's limited, there's a homeowner's tax credit that you can qualify.
Slightly different, right? That goes for the homeowner rather than the property.
Right.
Yeah, homestead tax credit.
If you have an income below $60,000, there's a cap on how much your taxes can be.
Right.
In total dollar amount, not as a percentage.
Right.
So anyway,
great.
Not to confuse people, but
No, that's great though. Thank you, Michael. All right, so some general stuff. This was kind of a high level overview, right? There's a lot of other details and activities that happen kind of behind the scenes, but hopefully this episode and the last one give you an idea of what to expect during this home buying process. A couple last pieces of advice: plan for things to go wrong, right? That if you're working with Michael and I, the possibility of that happening is exceedingly rare, but there are times, you know, if you're a buyer and you're working with us, there are times when sellers do unexpected things, right? There could be anything that any kind of unexpected thing that occurs during a property inspection. There could be things that happen with the appraisal. There are, you know, all sorts of things that can occur.
Appraisals, you know, and the thing to be important about is A, if you've planned for it, and B, have a call to action, meaning, all right, this is what happened. This is what I figured out. This is what I'm doing to fix it.
Right.
Don't sit on it. Don't think it's going to go away on its own.
Right.
Be proactive and fix it. And sometimes these things might happen and you never know about it because we fixed it without it. If only if we need to pull you into the situation, if we need something for you to do on your behalf, or perhaps you could offer some information that we need to clear up a situation.
And just like during the process, I think we talked about, and I can't remember the exact percentage, but I think it was like 75%. Mm-hmm. Once you purchase the house, also plan that some things are going to go wrong, right? That's one of the reasons why in our previous episode we talked about saving for the home repairs that may happen. And Michael used that great barometer, that great idea of about 1%, about 1% of the purchase price of the home. Just that way you have it around so that if something comes up, and there may be years when you go through and nothing has to be done,
Maybe many years.
but then you get a roof that has to be replaced or whatever. But
and it happens. It does seem to happen. You know how everything happens in threes?
Yeah.
I will say that when things start happening for your house, there tends to be a run on it. Like I had a roof needed being repaired, followed by the next year by HVAC.
Yeah.
Those were two expensive things back to back, but I had saved for it, so it was no big deal.
Yeah, absolutely. And just realize that things are going to happen. I think that, the metric was 77% of home buyers, according to the NAR survey that was done, that said that they encountered an unexpected repair in the first year. So, so just prepare for that. And when things go wrong, call us.
Yeah.
Well, we've worked with so many vendors over the course of the years. We know who's a great electrician, plumber, whatever you need, right?
Right.
Now, doesn't mean you necessarily have to use the people that we suggest to you. You may want to go get your own quotes. That's absolutely perfectly fine. But we usually have a great resource for you that's a trusted vendor that we've used and has demonstrated the ability to be like Michael and us. We're very focused on the client and delivering a great experience. Those are the kinds of vendors that we look for to recommend as well. So, other things, just stay in touch. Once the contract's done and the settlement's done, a lot of people think,
if you have questions
the whole
post closing, if there's anything that you have questions about, stuff you're
come up.
We've mentioned in the Unreal last week, the segment about the scams that post closing, you're going to be on a mailing list for people. If you have questions about anybody who did any work to the house, any of the documentation you got from the sellers, if they were kind enough to put that booklet together for appliances and stuff.
Right.
If you have questions, just call Brad. He'd be happy to walk you through it. And if
Absolutely.
you need some kind of, there might be a simpler solution that you hadn't thought about than an expensive repair. There might be, a replacement. It might be cheaper to repair something.
Absolutely. And the last thing I'll say is, if once you've worked with us, we kind of feel like you're part of the family.
Yeah.
So, we have client events that we have throughout the year. We have a great client appreciation event. Mm-hmm. And maybe the name's a little hokey. We call it Vesta Fest, but it's a great event. We have music and
let us
food
know
trucks.
How you're doing. How much you love the house.
We want to see how things are going and just be a resource for you going on throughout the amount of time that you own that home and beyond that, right? You're part of the family now, so reach out whenever you need to.
Absolutely.
Anyway, all right. When we come back, going to wrap things up with the Unreal and our Spotlight, and we'll be back in just a minute.
Try.
Welcome back to the Be Real Podcast, the Maryland Real Estate Podcast. I'm Michael Becker of Sierra Pacific Mortgage.
And I'm Brad Cox with the Vesta Group of Long & Foster.
Brad, it's time for the Unreal, something we see in the mortgage lending or real estate businesses that
just
doesn't sit right with us.
Doesn't sit right. It's crazy. Or can't believe they did that.
And I'm not sure if it's positive, but something when I was going over the numbers for this week's show, when it related to the interest rates and the mortgage applications, it's encouraging to see mortgage applications specifically for purchases increase, and the drop in rates certainly makes sense. Mm-hmm. The increase in refinances make a little bit of sense because the rates did drop, or they've been lower than they were for 4 months, but the big increase of 18% kind of jumped out at me, and it made me wonder who's doing refinances. There haven't been that many people who had bought at the rates in the sevens, where that's where you'd have to be to do a rate term refinance. Mm-hmm. So now this is just speculation here, folks. I'm speculating that a big part of them, a majority of them, may not be rate and term refinances, where you're just looking to either shorten your term or lower your interest rate or do both. It may be what's considered a cash out refinancing. Okay. And in the past, there's been one cash out refinance that's been abused more than others, and it's specifically the VA cash out refinance. The reason being, with a VA is the only loan, you can go to 100% of the value of a home on a cash out refinance. FHA and conventional loans cap you at 80%, and a lot of people don't have the equity to do a cash out. Where I think it might be predatory or abusive is when you encourage someone to do a cash-out refinance and pay off a lot of debt with that refinance, put them into a much higher rate, but by virtue of paying off all the debt, your monthly payments are reduced. Now, that might make sense. It might sound good when you're lowering your monthly payments $300, $400, $500 a month, and it might be something you have to do if you're backed
it's
into
super cash flow strapped.
Right.
Know,
if you're backed into a corner.
Yeah.
But in many cases, it may not make sense. You might have a VA loan that has a 2.75 to 3% rate on it. You might be looking at a 5.75 to 6% rate on to refinance. So you have to pay off the existing mortgage and then the other debt.
Right.
One thing I like to use, Brad, is what's called a blender rate to see if it makes sense. So let's say you had a 3% rate, $250,000 on a 3% rate, and you had $50,000 at 10%. The average rate between your car loans and your credit card, and you wanted to pay all of that stuff off.
Sure.
When you average those two interest rates together, it turns out to be about 4.17 or about 4.2%. So if you had to refinance and you were refinanced somewhere in the high threes or low fours, cash flow wise and interest rate wise, it probably makes sense.
Yeah.
But if you have to put all your debt at 6% at a much higher blended rate than that, it may not make sense. And it's something that I often see push for people.
Yeah.
And
it's just from the life of the loan, you're going to wind up paying so much more money.
Well, you're taking $250,000 and doubling the interest on it. Now,
Right.
you could say to yourself that, hey, rates will drop down the road and I could refinance, and that may or may not be true. I'm just saying be cautious when you're offered with that. Look at all aspects to it. If anybody is... A lot of the companies that do these VA cash, that's all they do, or it's what they specialize in. So they buy lists and they aggressively market it and solicit it. There are some guidelines, specifically the CFPB has for advertising. You can't promise certain things, but we all know those rules are broken by some of the shadier aspects of our marketplace, and people who get caught just pay the penalty or close up shop and open up somewhere else.
Right.
It may not make sense for you. I'd rather see if you had a lot of equity in your house and you're looking to do a refinance. Now, the VA cash out refinance is a great program. I'm not dissing it. I'm making sure that you don't get rid of that great rate you had on the first just to save a few bucks a month. A better plan of action might be looking at a second mortgage, a home equity line of credit, or a home equity line with a fixed rate. They're going to have higher rates. I mean, prime is 7.75. Home equity loans are probably in the 7 to 9% rate. But if you had credit cards at 20%, you could save money.
Still saving some money.
You could spread it out over 15 to 30 years, which could maybe save you money. And then at one point in the future, guess what? Rates will come back down. Then you look at wrapping that second mortgage and the new first mortgage into something at a time that it's more beneficial to you.
Sure.
Look for things like this in the advertising. Rates without telling you the terms. They might be advertising a super low rate, and there's lots of lenders that do that out there who don't mention the points you're paying.
Happens all the time. It's a
they
teaser
just have to
rate
mention,
out there. Yep.
They can give you the rate and the APR, and the APR should factor that in. So if your APR,
But people don't necessarily understand that, right?
Well, here's a little pointer. If you're at the APR that you hear advertised is a great deal higher than the interest rate advertised,
you know those fees are in there.
There's a lot of fees and points. Yeah. No closing cost refis. That's another famous advertising gimmick out there.
No such thing.
Can you call somebody up, Brad, and say, all right, hey, I'm Michael Becker, Sierra Pacific Mortgage, and I'm going to do a VA refinance for Mr. Jones. Mr. Title Company, please don't charge him. Appraiser, I need you to not charge him anything.
Right. Please do this for free, out of the kindness of your heart.
Right. Everybody's going to work for free.
Right. Let's all join hands.
No. There's usually something going on with that no closing cost. So you're paying a higher interest rate, which may or may not be bad, but there is no such thing as a
no free lunch.
No, there's no free lunch, no closing costs. Somebody promising you that you're going to skip a payment. With most refinances, there is a month that you go without making a payment, but you pay for that. In virtue, there's interest collected on your payoff from your old loan to the day you close, and there is actually one day that overlaps. And then the day you close to the next monthly payment, the lender will collect interest in the closing thing. So you do go a month without making a payment. You're not really skipping it. That interest is being accrued. Make sure you understand that. It is nice to have a break. You're rolling it into the loan. And when you do a refinance, it is always nice to have a month where you go without making a payment, but you're not really skipping a monthly payment. And another thing that's advertised often out there is the promise to get your escrow money back. You have an escrow account for taxes and insurance. Generally speaking, when you do a new loan, you're going to have a new account set up for that moving forward, and it may be collected at closing. The money in that old account is going to be refunded to you, but remember, it's being offset by the money you're putting in that new thing. There's no free lunches. It's not free money out there.
Right.
But these are the advertising techniques that people try to do to entice you into doing something that may or may not be in your best interest. Again, VA refinance is a great product. The fact that it allows you to take cash out to 100% is one of the benefits that veterans get that nobody else gets.
Right. And well-deserved.
And you may be in a position where you have to do something. If it frees up enough monthly cash flow that you have to do it, just know going into it, at least for the short term, you're going to be paying a lot more interest than you would be if you kept your first mortgage and looked at doing a second mortgage. And this is coming from someone who doesn't do second mortgages. I would have to refer that out.
Right.
I just want people to know that we'll always have your best interest, and any reputable lender out there will also have your best interest at heart. One commission check is not worth losing a client for life, and that's what I like to think. Most people need, Brad, I don't know if you know for real estate, but when it comes to mortgage loans, most people need 5 to 7 mortgages in their lifetime.
Yeah.
I like to do them all for you.
Yeah, sure.
Most people have multiple homes over their life, and if you do their first purchase, wouldn't you like to do all of them the rest of their life?
That would be nice.
Taking care of them will assure that.
Yeah.
So that was the unreal. I imagine that a lot of these refinances are being pushed on people, and that might be why the applications. And just because you took application and looked at numbers doesn't mean you have to move forward with it. It's okay to say, hey, I want to think about that, or I want somebody else to look at this, or a family member, or a trusted.
That's another red flag. If they're pushing for you to do that, maybe it's time to back away. And
I know it really gets under your skin. I know it gets under your skin when people. So don't succumb to aggressive sales tactics.
Yeah.
Rates will come down at some point. Who knows if they'll ever get back to the lows we had in 20 and 21. But there'll be time to do a cash out refinance if that's the way to do it. Enough for that. Now, next segment is what, Brad?
The spotlight.
And this is all you, buddy.
Yeah, well, we're going to spotlight. All right. I admit it. I said it before. I have an obsession with the acai bowls. Acai.
I love saying that word.
Yeah. So.
It's not Achaia. It's acai.
Acai.
What is that little symbol that goes over?
Right. Under the sea, right? I don't know. Something. I'll look that up.
Okay. I looked up Dwight Yoakam. That's
you
your
did.
Job.
Thank you. I'll come back with it.
All right, sir.
All right. Well, anyway, so our friends Penny and Andy Seabolt own the Life Cafe. Not L-I-F-E, L-Y-F-E. Life Cafe. And can I just say their acai bowl is it's amazing, right? Just no added sugar,
Good.
Healthy. It's really it's amazing. Now, I like the all-berry bowl with a little cacao nibs and maybe some almond butter.
What was the thing before the almond butter you said?
Cacao nibs.
What the heck is that?
It's from the cacao plant.
All right, very good.
They're good.
That's something else I'm going to have to look at.
Antioxidants, all that kind of stuff. It's a good thing.
But anti-inflammatory.
Right. So that my son likes the tropical bowl. There's all sorts of permutations of any of these, but so tasty, amazing. They also have really good shakes. So they have a food truck that you can find them around town. They post on their Instagram page where they're going to be. And so you can follow them around town and go pick up a bowl. You can order online if you want. They also have a new deal with Copper Mine in Timonium, in the new Copper Mine facility there. They're there Fridays to Monday mornings.
I'm pulling it up on my phone. Oh, there it is. Okay.
Yeah. It was in another gym.
It's on Timonium Road. It used to be Maryland Athletic Club.
Yeah, exactly.
It used to be the MAC. Okay.
Right.
Okay,
so now it's better. Now it's
That's better. It's Copper Mine.
That's right. Shout out to Copper Mine. But their hours they're there Fridays to Mondays, so over the weekend, 8 a.m. to 2 p.m. You try these bowls. Again, life-changing. Just so good. They're just so. I know I say that, but
where's their food? I mean, can you follow their food truck?
You can, yeah. So on Instagram at The Life Cafe.
And life is spelled with a Y.
And Life is spelled with a Y.
Okay.
At the Life Cafe.
So the
check
Life
them out.
Cafe with a Y.
Check them out. Follow them on Facebook, on Instagram.
Absolutely.
They are phenomenal. Help spread the word. Just outstanding stuff. Okay, so Michael,
Yeah.
another good episode.
Yep, we're
Great
wrapping this one
information
up.
for the buyers.
What are we talking about next episode?
Next time, we're going to be talking about the selling process.
Ooh.
We're going to do the same thing. Split it into 2 episodes. Home Selling 101 Part 1 and Home Selling 101 Part 2. So look for those coming up. You can check us out on the web at www.berealpod.com. You can listen right on the site. You can also submit comments or feedback on what you want us to talk about, how you think we're doing. You can also, I'd love to get comment, right? You guys are idiots.
That's fine. As long as it's...
No,
if you can call me an idiot, but you must give me some constructive idiot criticism. What do I need to do to not be an idiot, to move out of the idiot zone, so to speak?
Yes. But yeah, let us know what you think. And then you can also listen on any of the major podcast platforms: Apple Podcasts, Google Podcasts, Audible, Spotify, iHeart, Podbean, Stitcher.
Wow.
There's a ton, right? So,
Yep.
Michael.
Yes, sir.
Someone needs to reach you to talk about mortgages. How do they get in touch?
You can text or call to this number, 443-310-0012. Texting is great 'cause sometimes you're in a place where you can't take a call or return a call.
Sure.
But if somebody texts you, you can say, hey, great, thanks so much for reaching out to me. I'll be back to you in about an hour when I get done this so-and-so.
Right.
So 443-310-0012. If you want to shoot me an email with a question, I'll be happy to answer it. My email address is michael.becker@spmc.com. Michael.becker@S as in Sam, P as in Patrick, M as in Michael, C as in Christopher.com.
All right, and if they need to reach me, if you folks need to reach me to talk about any of your real estate needs, you can call me or text me at 410-375-7550 or email at brad@homesbyvesta.com, HOMES by Vesta.com, V as in Victor for Vesta.
I know that one.
Yes. All right. So, folks, thanks for listening. We'll talk to you in the next episode of Be Real, the Maryland Real Estate Podcast.
Thanks so much for listening. I'll see you next week.
Take care.
Try.